Hey guys, October 19th, 2025. So I wanted to take a moment to make this video, and I wanted to make videos this weekend going over individual setups and how we trade them, how we look at them, etc. But before I do, I kind of wanted you guys to have, I was thinking about this today, like a sense of, do stocks and stock setups have some form of predictive ability? And I just wanted to say that, in my view, I do not believe that technicals alone help you understand a stock's predictive ability. And what do I mean by that? Well, when I see a really nice high type flag, right? And it's in a, let's just call it the semiconductor space, and then another one with a high type flag in the semiconductor space, and another one with a high type flag in the semiconductor space. That's all good and dandy, but there is no guarantee that these things are going to break higher. What helps? Seeing them all actually push higher right around the same time, seeing that the market's healthy, noting that the group is, a top 20 group in the market, right? And that these names are all acting well together, right? That helps with knowing if a stock has good, quote unquote, predictive ability, that they're all trying to go higher because they are indeed breaking out of a flat base or a high type flag, or they're gapping up on earnings and money is actually going there. But when I'm looking at an individual setup, the ultimate arbiter for whether or not these things are going to go higher is the underlying market and the players, the biggest players who move these things. And even as a swing trader, when you're wrong, 60% of the time, and you still make money, you don't need them to have guaranteed predictive ability. What you really need from your stock setups is a clear level of defined risk when you go to enter where you know you're wrong. And let's just look at SMR, for example, this past week. Well, it looks like it's trying to go break out to a new all-time high, and it goes and hits it. But what's happening on the day where it gives you that double top short sale? Well, Oklow's pulling back, and the market's pretty choppy. So for some people, it looks like a breakout. For other people, it looks like a double top short sale. But ultimately, that setup can be played in both directions, but you have to have a level and a setup where you say to yourself, hey, this isn't a breakout. In fact, Oklow's now starting to pull back, and the market and these nuclear names are starting to pull back. Look at LEU. Look at the market. Look at Oklow. Look at SMR itself, the stock that I'm trying to buy for a breakout. And then someone on the flip side of that, someone in our room, Justin, for example, goes, hey, this thing is hitting that left side peak. Oklow's coming down, LEU's coming down, and this thing is breaking back through that left side level, that left side peak on the daily chart, and it's starting to break down. And I've got a level where if I short this thing, I know I got to leave in case I'm wrong. That left side peak, that intraday high, etc. So do setups have predictive ability? No, because going into that day where you think it's going to be a short, you're not sure until price action actually starts to play out. But what can give you the idea that it could play out like this? Well, understanding what's going on in the underlying market, understanding what's going on with its peers, understanding what the technical setup looks like if you're going to take this kind of setup. And I wanted to talk a bit about this because we will cover the double top short sale in a video, and I'll use SMR as an example. And so I don't want you to just look at this thing and be like, oh yeah, this is guaranteed to be a double top short sale. This is guaranteed to be a flat base breakout. Nothing is guaranteed, especially as a swing trader. I'm wrong more often than I'm right, but I still make money. Why? Because when I'm in a winner, I let it work, and when I'm in a loser, I cut it very quickly. And that, I think, is very, very important. Now, can you do things to stack the deck in your favor? Yes, if you're going to short, make sure you're paying attention to the group and the group is acting poorly. If you're going to go long, make sure you're paying attention to the group and the market and make sure that it's acting well. So that concept alone, I hope, resonates with you guys, because you start to see the power of, hey, I can be wrong more often than I'm right and still, one, make money, but two, it helps you feel like the setup has predictive ability, because guess what? If the market and that group is really acting choppy and rolling over, then this as a short setup is more likely to work. If the market's just ripping after a correction and the group is acting awesome and it's been one of the best groups in the market and it's coming out of a tight base, well, then you've seen this before, you've seen this movie before, and you know it's likely to work for a few days or weeks at a time from that entry. Where if you're wrong, you have very small defined risk, and if you're right, the reward potential is really unknown. Um, so this is just kind of something that I wanted to make sure that I touched upon when I'm going through any of these videos, talking about a high type flag or a flat base breakout or an earnings gap up or a high volume close or undercut and rally. Understand that no matter what setups we cover, you have to, and in time it gets easier, develop your situational awareness muscle. And nothing, I hate to be so blunt about it, nothing is going to help you develop that muscle more than screen time and saying to yourself, hey, I know that this SMR is not really a good long here. Why? It's already acting kind of weak right at this important level. The group itself, LEU, Oklo, NNE, they're kind of pulling back right now. And the market's a little bit choppy. So, and Oklo, the leader, is wildly extended. So I know that taking the laggard through this left side peak isn't really that good. Now, can it go on to work as a long? Sure. But if I am looking to take it as a long, I have to know that at this level, I'm wrong. And on the flip side of that, you say to yourself as somebody who might want to short, hey, you know what? If we start to work its way back through the left side peak, I know it's a laggard. I know Oklo's extended. I know the market's chopping around right now and not acting the best. And this is where I have defined risk in case this setup doesn't go on to work. So I think that these things are very, very important when you're trying to make your decisions in real time, because you want to look at the other components that are helping your group and your stock and the underlying market really move higher. And when you're trying to, again, take your entry, you have to think about what's my defined risk. And at the end of the day, stocks, the only thing a setup should aim to achieve is to give you defined risk when you're wrong, because you're wrong so often, right? Even if you take, Nick's support gaps or shorting at resistance gaps or an undercut and rally, you have to understand that there are moments in time when these things work better than others. I wanted to go ahead and kind of make this video to raise everybody's, a little bit of level of understanding that if I just show you guys a static chart and I say, look, this is perfect, and then I don't give you any context behind it, and you're just like, oh wow, yeah, SMR was perfect, but you're not thinking about the Oklo and how much of a laggard SMR is. If you're not thinking about the underlying market and how choppy it's been for the last few days, then you're really not going to have enough. You're just going to look at this and think, oh, everything's a double top short sale when it goes and hits a left side peak. No, it's not. And just because something is coming up to a left side peak doesn't mean you should short it. In fact, sometimes it means it's a perfect breakout, but there's context behind it being a perfect breakout or a really nice double top short sale. And what is it? It's the underlying market. It's how the group is acting. Is the stock a leader? Is SMR the first one hitting new 52-week highs, or is it the last one after Oklo has gone 130% or whatever it was, right? So these things matter, and anytime I'm going over static charts, right, anybody can look at a static chart and be like, I should have shorted it here, or I should have entered it long here. Yeah, that shit's known in hindsight. That's not helpful to you guys. So I want to make sure that I'm providing some kind of value that you guys are making sure you understand. There's a lot of context between why that's a really nice double top short sale or why it's a really nice flat base breakout and where we are with the market. Because again, the final arbiter is going to be the group and the market. And if the market's a little choppy and the group's a little extended and you're looking at a laggard, it's probably actually not that great of a breakout. In fact, it ends up being the other side of the trade. That ends up being a really, really great trade. And, you can't just look at that kind of setup and say, look at it 7 days later. I knew I should have taken it as a flat base breakout or an all-time high green line breakout. So please just kind of think about that context whenever I'm going through static charts, right? Static charts, they're just there to give you great examples of what happened in hindsight. But of course, that's not so great on its own in terms of education. But, adding some context that you have to be thinking about the group. You have to be thinking about the market. And just remember, setups on their own have no great predictive value, right? What is predictive is if you see a bunch of high type flags in the banking sector and they all go on to work, right? Well, that's just because that's where money's going. But if I see a JP Morgan work, and then that same day Citigroup is working, and then the next day I see Wells Fargo with the exact same kind of setup, and I say to myself, this is where I leave if I'm wrong. And yesterday Citigroup and JP Morgan were ripping, and today the market's still acting well, and the XLF ETF is still acting well today. I'm going to go ahead and buy Wells Fargo, right? That's somewhat adds to that quote unquote predictive ability, but technicals on their own do not. And just the flip side of that might be true. It could be that JP Morgan and Citigroup broke out on Monday, and then all of a sudden the XLF ETF on Tuesday, along with Citigroup and JP Morgan, are getting their butts kicked on Tuesday. Does that mean that the predictive ability for Wells Fargo, meaning, oh, I saw JP Morgan and Citigroup work yesterday, so that means Wells Fargo is going to work today? That's not how it works. It's likely that these setups don't work on Tuesday when the stocks that broke out on Monday are giving it all back, and then the financials ETF is really getting its butt kicked. So just kind of something to remember. The group and a stocks market are really the final arbiter for if your stock that you're looking at is going to do that thing that you think it's going to do. But technicals alone don't give you the complete picture, which is often why you guys hear me talk about what's the group doing, what's the market doing, what's the group doing, what's the market. It's very, very important. And then making sure that you're trying to align yourself and your entries and the way you want to buy these things based on those factors. Because again, if I just slap a bunch of static charts in your guys' face, you're going to see great examples of things that did work with hindsight. And again, we are operating in real time when things are moving quickly and you're trying to make the best decision that you can quickly in a market that's always moving during the trading day. And remember that just because you look at a technical setup that has zero predictive ability, what it has is, and what it should have is, a level of defined risk when you go to enter. And that is ultimately the most important part, because you're going to be wrong way more often than you're right. But when you're right, that's going to make up for 4, 5, 6, 7, 10 times that you were wrong in a row. And that's really the idea of being a swing trader. But like I said, I want to go ahead and start making these videos covering some of these quote unquote static charts, but then be able to add some context as to how we're trading them, and what are some of the things that I'm thinking about in real time as, these setups are potentially playing out. And then again, do you actually end up getting paid on that chart as it's playing out in real time? That's only ever known in hindsight. The only thing you know in real time when you're entering is where you're getting out if you're wrong. So hopefully this video helps, guys, and I look forward to kind of diving and jumping into talking about some of these setups going forward. Thanks.